Let's bring on board Dr. Bimal Jalan, former RBI governor, who joins in on the show now. And he's, of course, here to take us through what he's made of the decision that was taken by the Federal Reserve last evening. Dr. Jalan, thanks so much for joining in. We did see Ben Bernanke maintaining status quo. He refrained from easing and pulling back on the tapering program. Does this come as a surprise to you? And, how do you read into the fundamentals of the U.S. economy, the U.S. GDP numbers, the labor market conditions, as well as the inflation conditions?
Of course, surprise, yes. There was a widespread feeling that he will cut back what is called pumping money into the country. And it's a relief. It is a surprise and also a relief. From our point of view, it is very good. That if the U.S. is not tapering off, then all the concern about the value of the rupee and the stock market from that angle has tapered off. He hasn't tapered, we have tapered off our sort of negative view of the system if it had emerged, and he had reduced the spending by a lot. So I'm very glad, surprised but glad.
Well, that's right, Dr. Jalan. Well, definitely the Fed's decision has surprised the markets globally, but according to you, there is no immediate timeline which has been given by Fed. But do you see any kind of tapering which could come in the month of December?
Ultimately, it has to happen. In the sense that once the growth picks up, these are all temporary measures. Fed, it's not a regular job of the Fed to create money of this type. It is trying to get out of a recessionary phase or a double-dip recession, which they have, and it's a very good thing that is prolonging it, but ultimately it has to end. Of that there is no, there cannot be two views on that issue.
Dr. Jalan, Ben Bernanke last night acknowledged that the tapering program and the quantitative easing program, rather, does create problem for emerging market economies. How do you see a lot of these emerging market economies dealing with it? Because we've seen troubles, for the Indian economy. The Reserve Bank of India has also been, questions have been raised about policy decisions taken. How do you see our bank probably moving, or the other emerging market bankers also moving in light of the decision?
This is a very important issue that you have raised. I think we have to take a medium-term view. Earlier, it was trade which used to influence, whether the Sensex is going up, rupee is happening, whatever is happening, and we are not that dependent on trade. But the financial world is very integrated, and therefore what happens, in terms of, otherwise who would have cared, say if you go down 20 years ago or something. The most important issue that I would put before you is that you have to reduce our dependence, and the emerging markets have to reduce their dependence on this kind of episodic happening, that if the U.S. economy is down and they are pumping money, then we get money and we are happy and we are exporting and so on and so forth. So you have to take a long-term view of how is it that we are going to tackle our current account deficit over, say, the next year or two. Because CAD, financed by FII flows, or this creation of money by the Federal Reserve, is not something that in the long term can support the Indian economy. So what I'm trying to say is, in the short term, it's a surprise and a happy one. In the medium term, now it gives us time to formulate policies and response to our current account situation, which is not dependent on reversible equity flows from abroad of this type. As you have seen, when there was speculation about tapering, that we were in some trouble. There was a lot of volatility in the rupee value, declined by 20% or so. So how do you expect the economy to function in an integrated financial market if you are dependent on this kind of short-term flow of funds? And we have avoided this in the past, and I hope that over the future, in the next year or two, that we will take measures to fundamentally correct our CAD problem and our dependence on these kind of flows. India should not be dependent on what Federal Reserve decides to do over the long run.
Right, Dr. Jalan, and talking about... sorry, go on. You were saying something.
No, that's fine, yeah.
Okay, I'm talking about the rupee, Dr. Jalan. The movement has been quite, rupee has moved quite swiftly right to those 68 plus levels, and now it's come appreciated to 62 plus levels, and this movement has been in just about 15 to 16 trading sessions. Tell us, how does one derive the fair value of rupee?
No, so far as the value of rupee is concerned, I am for a stable range. No target, whether it is 68, 62, 65, it should not be undervalued, it should not be overvalued, it should be within a range, as it were, so that the market can take stable investment views. I mean, how would you react? I mean, if the rupee is 68, you start buying dollars. If rupee is 62, you start selling dollars. You don't know where we are going, and so on and so forth. So I'm sorry to be, a little bit concerned about volatility in the value of rupee. So far as I am concerned, the rupee has, I don't target a rupee, whether it's 62, 63, 64, but I would like less volatility and more stability in terms of what the markets, what our investors can, the investors, if they are taking, say, 10-year view, 5-year view, what do they expect? Yes, there will be change in the value of the rupee, and we have always said that it is managed floating, and we want to make sure that we have sufficient resources to handle it. Our reserves are high. So from a fundamental point of view, I don't like this volatility.